My first question will be on how is the momentum expected to sustain in Q4, seasonally a weak quarter?
Yeah, so for us, Q4 is traditionally a weak quarter, but having said that, this year is showing an unusual trend of, showing much higher growth because we are coming out of a pandemic and there is extra demand. So we can expect to continue that kind of performance for the remainder of the year as well. We are expecting double-digit growth in Q4 as well. As of now, it's looking very strong. Yes.
And next, Arunji, your comments on expected footfall going forward and sustainable rate?
So this extraordinary growth will definitely be there for FY23, which is the current year. Next year onwards, we are not expecting this kind of a jump in growth for our existing parks. But having said that, our new parks slowly will come on stream from 2025 onwards. So from existing parks, we are expecting about in double-digit growth for next year, but not maybe as high as it is this financial year.
Okay. And so next, what views and average spends per head at parks? What's your comments and what's your outlook on spends?
So this quarter, our average revenue, which is ARPU, has gone up by about 27% compared to the previous year. So that is a healthy trend, and that will continue for the for the remainder of the year as well, for Q4 as well. Having said that, we can expect some price increases to happen for the next quarter, which is Q1 of next year. So that price increase will also happen.
Okay, so my next question was around ARPU only, average revenue per user. The trend for ARPUs, what's your expectations?
Can you hear me?
Yes, sir. Yes, sir. Your trend for ARPUs?
Yes. Sorry, I couldn't hear your question.
Yes, so for as you shared ARPU's details, so what's your outlook on ticketing and non-ticketing mix?
So, for example, this year our ticket to non-ticket was about 75 to 25. That we hope to change to about 60 to 40. But that will take a couple of years. Slowly, our non-ticket revenues will improve, and we are doing a lot of investments in our existing parks and for the new parks to make sure that our F&B and retail spends go up. So that effort is on, and we hope that that will also change the ratio from 75-25 currently to about 70-30 in the near term, and long term we are looking at 60-40.
Okay, and next, sir, will be on capex allocation for construction of the park in Orissa, and how long before a park typically breaks even?
So our parks are typically breaking even operationally from first year of operation itself, at EBITDA positive. We can expect from first year of operations, and at a PAT level, it will be positive from the year 3 or year 4. So that's how, for example, our big parks that has shown that result. But for smaller parks like Orissa, we hope that the EBITDA will be faster, and our PAT level also will be faster because our pricing will be attractive, but at the same time, our cost will be much lower.
Okay, next, Arunji, your update on park in Chennai, because previously talks are on with government for the approval of the Chennai park.
Yes, so we are continuing our talks with the Tamil Nadu government. They have assured us that the LBT issue, the extra tax on the ticket, will be removed, and we are waiting for them to communicate. Once that the communication happens and there is a formal communication, then we will resume our work on the park.
Okay, and the last question is update on your balance sheet if you can share, and what's the cash and the coming plans?
So we have more than 200 crores of cash currently in our books, so that we will use for our existing projects, some sustaining capex, and also for the new park. So we will not need to raise any funds immediately. Once Chennai park construction resumes, at that point we will need some additional funds, but we might look at some debt, but not currently.